Hey everybody, this is Jose Blasco. We are about to get started in just a few seconds. A quick sound check, please. As always, a quick message on the chat box would help me understand that you hear me well, and therefore we're ready to get started. So please go ahead and type this nice message to our members of our community. Very good, very good. Ahmed, how are you? Good to see you. Good to see you. Good to see everyone. Let me turn on the video stream so I position myself in the bottom right corner as I always do. How are you, everyone? Good to see you, and 15 seconds to go. So let's begin, guys. This is basically the time, isn't it? Very good. 3, 2, 1, and that's it. We are live, everybody. This is the time to get started. This is June 16, 2021, and this is Options with Options. My pleasure to lead the session today. Jose Blasco is my name. Today, as we do every Wednesday and every Thursday, isn't it? We look at the options markets. The beauty of options is that, as the name of the session suggests, options give you options, so we can always position ourselves to profit from markets going up, from markets going down, from markets staying sideways, from markets where the volatility levels increase or decrease. Even things such as time passing are moving pieces of the options puzzle that help us to get some profitability kicking in our options trades. Okay, so this is the plan, this is what we do, and therefore that's what we're gonna do today. Before we get started, the disclaimer on the upper left side of the corner, please go ahead and read it carefully. This is important information. You may have read it before, then it's great, but if not, make sure you read it carefully, you read it completely. I am counting on you to read every single word because it is important. In this introduction, I would also like to remind, apart from hello to everyone, that we are simulcasting. And that means that while the session is happening live in our private room in our website, www.tradewithufos.com/live, that very same session is also being broadcasted to public spaces such as YouTube, Facebook, and so on. And what are some of the implications? Where, number one, video lags are going to be different depending on where you are in the world and which platform are you using to connect with us. So keep that in mind. You may see delays when it comes to what you see on my screen and what you see in yours. You may see a few cents of difference with the prices because, maybe we have like 10 seconds of delay or something like that. Okay, so just keep that in mind. And then the other outcome or implication of simulcasting is that what we do in the public stream and the private stream is the same type of content, but in the private room we have the full duration session, where in the public spaces such as YouTube, for example, the duration of the sessions is limited. Of course, it's free, so it's great. In the private room, you have to be a coaching plan member, so there is a fee associated to that. You can check and learn more about that on the website, and then you have access to the full duration session. Okay, so the way I think about it is, if you are, let's say, what I call a part-time trader, okay, looking at trading seriously, but looking at taking a trade here and there, and that's it. So then probably YouTube, Facebook is more than good enough for you, and it's free. If you are like me and you are super passionate about trading and never got enough and always want more, so then I would recommend you to become a coaching plan member, and therefore you have access to the private room and therefore access to the full duration sessions. Okay, the plan for the session will be to look at the market, look at the trades that we have running at the moment, and see what do we need to do with them. And from there, we will move into identifying new trade opportunities and executing them. Okay, that's the plan. So here we go. Just minimize my TradeStation. Okay, yeah, here it is. Anyway, so let's begin with the market analysis. How are you, Siderman? It's good to see you. You guys on YouTube have been very, very shy today. Just go ahead and say hello, my friends. That would be good to see you are there. So again, what do we see with the S&P? Well, we see a situation that we don't see often, but it's happening at the moment, which is a market which is behaving in a way that is totally away from what statistics would suggest. Statistics would suggest that when the climate is up on the S&P, we get climates with those thick blue dots that last 9 candles at a time, 882, I call it 9, but we've had that condition for 18 days already, 18 candles in the daily time frame. In other words, this is a very, very stretched market based on probabilities. Well, it was not expected based on probabilities. It was kind of expected based on the fact that you probably remember me saying that we just keep having new UFOs that keep forming, right? And that, of course, is going to normally make the climates to last more than what is expected. But what we have this week, it's a different story, because now there is, some decent empty space below price where there is no green UFO. Okay, so now if the market starts falling, it's not like it's going to fall a bit, hit a UFO and go back up. There is no UFO unless we drop to 419. So in this sense, we are now, apart from the fact that from a probability standpoint, the market should turn and we should start seeing some of the red dots. Apart from that, based on probabilities, now it's kind of like it's more likely going to happen more than in the prior week, given the fact that now we are lacking on green UFOs right below price, where in the prior weeks the UFOs were just being formed one on top of each other. Okay, so it's not the case any longer, and we may have that change of condition at any moment now. Okay, when looking at the VIX. Okay, so looking at the VIX, okay, so you can see the VIX is going down by 2.23%, so 16.6 is the current value for the VIX. Notice that we have a green UFO that formed that was not there before. In other words, if the market keeps rallying just a bit more, typically volatility will drop to this level of 1598, and from there, volatility will tend to rise. And if volatility tends to rise, that means that the S&P may tend to fall. And therefore, that may be the time where we see that climate change, okay? Which, again, is not going to be a big deal, or should not be a big deal based on probabilities, because if the climate changes, okay, it's supposed to change for 3 candles going down and then back to go up. So again, it may be that the market is just going to fall until that UFO, maybe the next one, but then that's it, back up again, okay? So this is what statistics and market conditions suggest, okay? So we're going to let this happen. Yes, and news are happening all the time, but you see, Ahmed, this is something quite interesting, because typically when we have an important news ahead, what we see is the VIX going higher, because people are buying options for speculation or protection, and therefore the prices of options are going more expensive. But it's not the case today. So it's like no one cares about what is going to be said on the Fed, a decision of the interest rates. Probably most people expect nothing to change or something like that, and therefore we don't see an impact, at least in the options prices. Okay, even though, Ahmed, I am with you, totally true that potentially that it's something that could impact the markets. Okay. Siderman, you have a green UFO at 423. Well, I don't have it. My settings, we talked about this before, are 61.8. Okay, and we talked about the settings as well when it comes to the fact that I use natural hours. Not sure if you are using natural hours or you're using session hours. That could be the reason. Okay, so take a look at that and let me know on the chat box afterwards. Okay. Cool. Okay, so let's continue here now that we know what's going on with the market. So let's look at what's happening with our trades, okay? And we'll start with TIM. With TIM is the trade that changed the most, okay? That changed the most since the last time, okay? So TIM is currently showing $157 of profit, okay, which is good. It's certainly a trade that looks profitable and is looking good. But when you look at the chart, okay, and let me load OptionStation Pro, because I'm gonna need it right now. So when you look at TIM, okay, we are expecting that stock to stay in the purple area. Okay, we are expecting it to stay in the purple area, but notice what's happening at the moment. Okay, so price went all the way to 248, kind of challenging the 254 mark. Okay, so last week when we met, that stock was trading around this price level, and it was looking very clearly that stock was going to end up in the purple area. But now it's not that obvious anymore, because we still got 2.5 days to go until expiration day on Friday, which is June 18. So let's take a look at Option Station Pro and load TIM, because we may need to do something about it. Okay, we may need to do something about it. How are you, Maka? Yeah, Siderman, look at the natural hours. Again, you know, computers do what they do. So if we have the same data, we have the same results. Okay, there is no doubt about that. So keep looking into the differences with your parameters and mine. I'm using natural hours instead of session hours. Okay, cool. Okay, so anyway, looking at TIM June 18, we can see. Okay, we cannot see. Okay. Why is it that this is showing nothing? Okay, now. So we can see that statistics suggest 257 to 241. So if I do 241, okay, that's pretty clear, right? So 241 is somewhere here. Okay. If I do 257, well, then that's now a problem, because 257, it's beyond 254, which is the upper part of the purple area. Okay, so it looks like we are at danger on the upper part of the condor. So we need to work on trying to fix this problem, and we need to take a decision about what to do and what not to do. So the first thing, the first technique that we have discussed before, and again I want to remind you that this trade is made of selling the 260s and selling the 190s. Okay, so one thing that we want to do, because again the units that are potentially going to produce pain are the ones on the top. If we go above 254, to be honest, we need to go above 260 to be in pain. Okay, so there is more wiggle room than that. Hi Joanne, how are you? It's good to see you. So the 260 are the units that may be in pain at some point. Okay, but you know there is room to go, so it's not looking so bad, to be honest. But in any case, the action to be taken is to take the units from below and roll them higher. So to close those units from below for a profit and resell new units at a higher price to get more premium in. So if in the end we get hurt by the 260 call, at least we will have brought in more premium, and that potentially will puts us in a position where we may not profit, but we're gonna lose much less. Okay, so that's the idea. Yeah, so Siderman, maybe you want to delete your cache folder, or maybe we need to delete the cache folder. One of the two may have corrupted data if we have different results. Okay, yeah. So anyway, so let's keep going on the plan here. Okay, yeah, so let's take a look at, first of all, if we're gonna roll the 190 put, how higher are we gonna roll it? Right? And the idea is to take your bottom line and move it higher, but how high? Well, the place would be here. Okay, that would be the place. Why? Because this is below the dotted line, and we have two green UFOs to defend ourselves. So the same rules that we use to enter the trade at the beginning are the same rules that we're going to use to roll and evolve the type of position that we had, given the fact that it seems that the upper range seems to show a little bit of danger coming in. Okay, so in other words, we are looking at the 230. So when looking at the 230, okay, I'm not sure how much we're gonna get paid. First of all, I can see lots of lack of liquidity. So this is gonna be a tough one, my friends. This is gonna be a tough one from 40 to 5. Okay, we only got liquidity if we are dealing with like the 240. There is liquidity. We got bid and ask. But if we go below like 235, it's not looking good at all. Really not looking good at all. Really not looking good at all. Okay, so this is one situation that could happen. Okay, and so what do we do when that happens? And by the way, this is having an easy way to evolve and tweak your trades versus having a tough time to do that. Normally has a lot to do with how liquid the stock you're using is. Okay, if you use markets that are super liquid, normally doing those tweaks it's easy. If you are using markets that are less liquid, like TIM, If all is good, great, but if you have to do tweaks and rolls and evolutions, then it's not so easy any longer. Because you saw lack of liquidity basically, would kill you trying to do that. Okay, even if we got that liquidity there, closing the 190 and buying the 180, okay, that by itself may be a challenge. So let me see, what do we get if we look at the 190 and the 180? 190, well, actually that may be easier to close. Okay, 5 and 10, and 180, 10 and 15 with 18 the midpoint. So yeah, actually because there is no liquidity, as you can see, volume is zero, even the priority is zero, so it's not like they are liquid at all, because they are so far out of the money. But at the same time, because the prices are much less, so you benefit from bid and ask prices which are nearer to each other, so we may be able to close and get out of the 190 and the 180. Okay, but doing the 230, which is for us to collect more premium, seems to be quite difficult. Also, it's not worth it, because if you do 230 to 20, okay, you do 230 to 20, you're gonna receive 22 cents, assuming you get the midpoint, and then you're gonna pay 18 cents. So you are net collecting 4 cents of premium, and you have to pay commissions on top of it. So it's just not worth it. Okay, not worth it. Okay, so we need to use common sense. While we have rules and we have a process to follow, and if things happen the way it happened with, if you remember the trade with Facebook, so we had multiple opportunities to keep, working on the trade, and that was fine. But if you have a situation like that where everything is looking good almost until the end of the trade, and 2-3 days before the expiration, you have this crazy rally, now you're gonna lack liquidity on many strikes, and now you're gonna have the problem we are facing. Okay, so how can we fix that? Okay, how can we fix that? Well, I cannot go ahead and keep rolling higher and higher and higher, and artificially just sell the 240 just because I got liquidity on the 240, because I don't have green UFOs. Okay, if I do that, I'm just gonna do it for fun, so you see why you don't want to do it. Okay, so let me go ahead and duplicate the trade. So this is the original iron condor. I'm just gonna leave it alone there, and if I now go ahead and take the 190, 180. Okay, and let me do this. So if I take the 180, 180, okay, and what I do is, let me add the two together. So I make this to be a custom, and basically I reverse those values. Okay, so notice that I did +1 for the 190 put and -1 for the 180 put. Okay, what that means basically is that I'm closing the puts. Okay, because on the upper condor I am selling the 190 and buying the 180, so now I'm doing the opposite, so they neutralize each other, and that's how you can see that now I'm flat here on the upper part. Okay, and then if I go ahead and I roll higher the puts and I sell the 240 as we said, and I buy below the 230, okay, so basically this would add, if I do it like that, okay, so this would add 45 cents. If you do everything midpoint, this would add 45 cents, and basically what you have done is, now if you're right, so you're gonna make more than before, you're gonna make 220, but you're still leaving yourself in a position where if you're wrong, you're gonna lose about 800. So you are not doing much, because the only thing you're bringing in is 45 cents, is not that much more, and you are still, exposed to $10 strike distance. So it's not really helping, and putting the 240 option strike in this change that we are implementing, basically would put you in a position where there is no green UFO. So the problem is not only is that it's not really helping the trade that much. The second problem is that what may happen is that market now falls, okay, and you don't have any UFO to go through here, okay. And I was maybe too aggressive with the drawing, because what may happen is that it comes to the UFOs and then bounces, but on expiration date you are below 240, and now you end up with a full loss, where if you had sold the 230 you would not be in a full loss, because the UFOs pushed the prices back up. Okay, so in other words, the place we need, the strike we need, which is 230, is not usable because of lack of liquidity. And looking at the option chain to find liquidity and sell that strike without respecting the UFOs would be a terrible mistake to be made. That doesn't really help either. Okay, so what else can we do? Well, we got two choices. Two choices left. One, since the trade is profitable as we speak and we are in danger, close it. Close it to collect our $165 of profit and just leave it alone and the trade is over. So that's the next natural choice. Now, before we do that, sometimes, not always, what we could do is to go all the way, okay, go all the way to the end step of the process. You may remember that the processes when a market moves against you is to roll until you become an iron condor, which is an iron butterfly, which is the last step in the process. Okay, probably you guys remember that. So what I'm gonna do now is I'm gonna try to see what happens if I make it an iron condor all the way. Okay, because I'm gonna collect maximum premium, and since I already accumulated $165 of profit, the two things together may negate the risk of the trade, and then it's worth it for me to stay in an iron condor position for another 2.5 days. I don't think it's going to be the case, but sometimes it would work and it's worth it to check. If not, then the right decision to be taken would be to close the trade now, because we are at danger based on probabilities. So close the trade now, which is basically for almost the whole profit. The whole profit would have been 165. Currently the trades shows a profit of 165, so it's almost the whole profit, and we remove the risk of the trade and we go find something else. Okay, so that's going to be the decision that we need to take now. Okay, so how would you do the iron condor? Well, this trade is made of buying the 270 call. Let me change my keyboard settings. The 270 call, and it's made of selling the 260 call, and it's made of selling the, let me make no mistake, 190 put, and it's made of buying the 180 put. Okay, this is how the trade was made. So what we could do is close the 180, close the 180, okay, which is what I'm doing with those two guys here in the simulation. Okay, that's what I'm doing, because I reversed what was a plus is now a minus, what was a minus is now a plus. Okay, so I'm reversing it there. And once you have done that, now to make the remaining units an iron condor, you will want to sell the 260 put and below buy the 250 put. Okay, that's how you would make an iron condor. So using the same strike as the call you sold, and then same distance above, which is 10, you will project now same distance below, which is 10, bringing the put to be the 250 strike. So if we were to do that, so what happens? Okay, again, I'm not fully confident that what's going to happen is going to be too good, but we're going to try it because sometimes it's worth it. Okay, notice that in this case we're bringing in $760 of profit. Okay, so if we were to do that, now we will stay in a trade that could make for us up to $915, which that is kind of like if the stock ends up exactly at 260, which is, you know, normally not the case. It's going to be somewhere in another place. So you may end up making 400 or whatever, which is more than 175. Okay, so that's good. Now, the other thing is that there is still a bit of risk, because notice that we are below the zero line. So how much is the risk? Well, the risk is 65. So in other words, moving all the way to the last step in the process, which is to convert the iron condor into an iron butterfly, provides a great benefit, as you can see, because now our risk that was close to $1,000 becomes 65, and our profit that was going to be 175 maybe up to 900. So from that point of view, it makes sense. But at the same time, now you are redefining the range, which now the profitable range would be between, let's say, 251 to 269. Okay, so 251 to 269, if I go back to the chart, is, so 251, I mean the current price is 249, right? That's the current price, 249. So 251, I'm just going to use green colored lines, okay? So you understand green means profit zone. So 251 is more or less here, okay? And I believe I said, was it two? I forgot. Let me check again. The upper part, it was like 267, something like that. So 267 would be here. So in other words, now you are giving yourself the opportunity to profit, but for you to profit, the stock between now until expiration needs to end up above price. Okay, and I'm just gonna change the fill color to be cyan. Okay, so now that the light blue zone, it's the profitable zone if we were to do this conversion. In other words, if the stock ends up in the purple area, you may end up losing $65, where if you were to close the trade now, you make 165. Okay, so I guess that what to do has a lot to do with your risk profile, your risk appetite, and so on. In my case, I am a very aggressive trader when it comes to collecting profits, and my choice would be to close the trade. But I could understand that some of you may be like, you know what, I'm just gonna leave it open, and I may make $900. I could understand that, even though, again, when you look at what's happening here, so the climate is 7, statistics say 7 is the maximum. So in other words, to me, with 2.5 days to go, it's more likely that this market may do something like that and fall, and we end up below 251 than if we end up above. Okay, so my view on this particular trade is to go ahead and close it manually. We could not do too much when it comes to trade management to improve it, but we end up the trade with about $165 of profit, where we were planning to make 175 at the beginning when we started. So it's not a super success trade, but it's pretty okay. Okay, it's pretty okay, and that way we get out of risk, because statistically there is risk now as we have the dotted line surpass the upper solid line. Okay, how are you, Leland? It's good to see you. So in other words, time to close the trade. I'm gonna go ahead and do that. I'm just gonna pick team from here. I'm just gonna select all those different strikes, right click to create a closing order. We are buying back an iron condor. It seems that we could do this for 10. Okay, now notice how the midpoint is 10, the natural price is 45. So as we know, there is lack of liquidity on some of these options. On the other hand, remember, there is no super rush to do any of this. Okay, so take your time, try to shave these as best as you can to get the best price as possible. And again, to make sure that in my case, I'm gonna get it filled. Okay, I'm just gonna move to, let's say 40, and see if I can get it. Okay, and as I get filled on the simulated account, that may also give you a reference for what price to get it at. But I would certainly start with 10, maybe 15, and see what happens. Okay, so confirm and send. I'm gonna send this trade to close it at 40 cents, and I just got filled at 35 cents, so I am out of this trade. Okay, so of course, if I got filled at 35 cents, that means that I collected $175 of credit when I started the trade. I closed it at 35 cents. So the net profit for my trade is actually $140 minus commissions, of course. That would be the net profit of the trade. Okay, and the trade is now over with team. In my case, some of you may choose to evolve it into an iron butterfly and keep it alive a little longer. Anyway, so let me take a look at that. Cyberman, why not wait until tomorrow, keeping in mind the Fed meeting today? You could, but again, normally those things are priced in the prices of options, so I personally don't care much about news and announcements. They often keep you away from good opportunities, and also we are working, with the option strategies with very wide ranges. We're using higher time frames to plan our trades, so I'm certainly not, I don't feel any problem about the fact that there is a Fed meeting today. Okay, but again, Siderman, you tell me, look, I'm super conservative, I want to take it easy, I am concerned. Okay, so no trade today, do it tomorrow. nothing wrong with that. Just the fact that you may miss an opportunity or two, and that's not a big deal either. Okay, so that would be the way to approach it. Okay. Anyway, so closing team, and now we're gonna review MasterCard. So what's going on with MasterCard? Interesting. Where are my trades? Interesting. I noticed that since some time ago, okay, now I noticed that since some time ago, no, this is unallocated, this is not right. Oh yes, this is right. Yes, correct. Okay, yeah, I noticed that since one of the updates I got on TOS that, you know, sometimes my PNL hides and then I need to find it. But anyway, so what do we have with MasterCard? Okay, well, MasterCard is another Iron Condor, everything with Jun-16. MasterCard is currently showing $74 of profit, so the trade is working fine according to plan. We are in the purple zone. If we look at statistics, we are supposed to stay between 375 and 357. So 357 is here, 375 is more or less here. So in other words, we are indeed very, very, very likely going to end up in the purple area, especially we have UFOs above and below. This trade looks beautiful, to be honest, and that one, you know, I don't have too much to comment. It's just looking fine and nothing to be done so far. We'll review it again tomorrow, but unless something very dramatic happens to MasterCard or the financial industry, it's looking like it's going to be a profit, okay? From a statistical point of view, of course. Joanne, good point. Yep, no rush. That is definitely valid. As I said, Maca also okay to do Iron Butterfly tomorrow. Yes, absolutely. Even though I will not do it, Maca, I mean, it's okay to take your time, okay? But I will not do it because you are at risk today, right? So the dotted line is beyond the solid line today. So if you decide to not to do this action and you convince yourself to do it tomorrow, what I'm guessing, and feel free to confirm if I'm right or wrong, okay? And I'll say with a smile on my face, okay? So what I'm guessing is that you're thinking, well, tomorrow the stock may move a little higher, or maybe I'm lucky and it moves a little lower. So then I get more time decay on the calls, but also I get more value on the puts. So when I do my butterfly tomorrow, now I'm in profit no matter what, and now I can make my $900 with no risk. Maybe you're thinking that. Okay, and if you're thinking that, it's a very good observation, but deciding to do that today means that you are ignoring the fact that the trade is statistically at risk. And therefore, to me, unless you have specific set of rules that explain to you how to do that and why you do it in your trading plan, and you're following your rules, and then it's fine. So to me, based on what I am exposing you to in the sessions, to me that would be basically to basically violate a rule, okay? So I would do it today. Whatever you choose to do it today. Don't wait until tomorrow because you are at risk already. Yeah, more information available after you see price movement, Maca, but what if price movement is against you? Not only you get more information, you also get more pain, right? And you may say, wait a minute, but then instead of closing the trade for $100 of profit like you did, then you end up closing the trade for $100 of profit instead of $140, and I left $40 on the table. It's not a big deal to me, so I choose to stay. So again, if that's your rationale and you have a rule to decide why not 140, why 100, you know, you have some sort of a rule that tells you how far you're gonna take this concept, you know, then I'm fine. But if you are doing it out of, you know, hopeful greed, not sure if that's a valid term or not, okay? But if, and you know, I like to make up terms and sometimes have these bad jokes. But if you are doing it out of hopeful greed, then it's not valid because you are technically at risk based on statistics as we saw today, okay? But again, if you have a rule to decide why you do it like that, then it's absolutely fine as long as it's a rule. Cool. Okay, next one, Starbucks. So Starbucks, we have it here, and Starbucks is showing just a tiny bit of profit. Starbucks is a trade using 25 June. So it's another iron condor. That one uses a longer expiration date. We are, in the middle of the range. Okay, we are definitely in the purple area. So let's take a look at Starbucks and see what statistics suggest. Okay, statistics suggest 115, 108. So 115, 108 is. So 115 is more or less here, and 108 it's more or less here. So based on statistics, we will end up in the purple area, and therefore it's all good. So nothing to be done with Starbucks. We just wait, for time to continue passing. We'll review it one more time tomorrow. What about PayPal? Okay, and this is one of the little bit of challenging trades that we have. Not a big deal. Okay, within contention within the plan, but this trade, at least if you look at it in Thinkorswim, it shows minus negative, negative 291. Again, it's less bad than what it looks like here, because remember, we've been working on this trade for multiple weeks. So far we are using July 16 and June 18. This is a double calendar. Okay, and what we are seeing so far is that this market has been moving. Okay, it has been moving. We are $10 above the 260, so we are $10 in the money, and that's the reason why the 260 call is hurting, and that's the reason why we see some negative PNL. Now, having said that, the real pain of the trade is less. The real pain of the trade actually is minus 61. Why? Because we've been tweaking and tweaking and tweaking the trade, diminishing the net cost basis, and even though TOS shows, how much was that again? $291 of loss. The reality is that we are underwater by negative 61. Okay, so it's less, problematic than what it looks like. Also notice, very nice, how this chart is now rising. Okay, it's higher than what it was before. And why is that? Well, it's because implied volatility has been going higher for this stock. We are talking about 31.71% now, that when we started, I don't remember by heart, but it was less. Okay. Sayman, try for 2 days to get filled at 20 live, never filled with Starbucks. That means that your options are far out of the money. There is little liquidity, which is good, because they are likely going to end up, with no value on expiration day, as we saw based on statistics. So at the moment, nothing to be done, Siderman, even though I know you like to close your condors for half of the premium. But if your strikes are so far, so then you may be suffering what you're seeing now, which is lack of liquidity not allowing you to close the trade. Okay, so keep trying. Okay, and we can continue talking about that tomorrow in case something needs to be done tomorrow. Okay. Same for you, Maka. Got you. You guys are talking about Starbucks, right? Yeah, I think so. Good. Okay, so anyway, so let's talk about PayPal, okay? So what do we have here? Well, we have the June 230 put, which is currently trading at 9 cents. We sold it at 28, and it is very likely, very possible that this option is showing distorted breaks, and therefore it's time to roll it. Okay, so let's start with the put, which is the easy one for us to check. We said it's the 230 strike, so let's take a look at the 230 put. 230 put. Okay, so we need many strikes. 230 put, which is showing an extrinsic value of 9 cents, where theta is 15. Okay, so in other words, you're gonna make $15 a day times 2 days and a half. That's, like 40 cents, but the most you can make is 9. So it's pretty clear. Greeks are distorted. Okay, so we're gonna work on rolling. We want to roll the 230 put. Okay, from June 18 to June 25. And if we do that, we're gonna collect 12 cents of credit, which is a very small value, and it makes me feel that probably we also have distorted Greeks on the next expiration date. So I would like to check what's going on with June 25. So the 230 strike has an extrinsic value of 22 cents with a theta of 7. Okay, so We got 9 days to go. So 9 times 7 cents, that's 63 cents. But we can see how extrinsic value is 22. So the Greeks are distorted, and this is because it's so far out of the money. So what if I look at, July 2nd? So July 2nd is providing 38 cents of extrinsic value. Theta is 6, and it's 16 days. So 16 days times 6 cents, that is 96 cents, but extrinsic value is 38. So again, Greeks are distorted all over the place because the price of that stock has been moving too much to the upside, and therefore, we are not collecting enough premium from those options, and we're gonna have to pay a commission to do the trade, right? So, to collect 10 cents, you have to pay commission, so it's just not worth it. We've seen that before. Okay, so tomorrow we're gonna review this, but at this moment in time, I'm just gonna tell you that what's likely going to be is that we're gonna let the 230 put expire on Friday, and we're gonna sell the next week expiration on Monday. We're gonna go ahead and sell it then, okay? So that way we will pay 1 commission instead of 2, and hopefully in the meantime, so the stock will come down and we can get a bit more from the put. Because doing it now, basically, would only add 10 cents to the equation, and you have to pay commissions for it, which is not worth it, as you can see, okay? Strange, I put a good cancel at 21. I was filled the next morning, Joe's people. Okay, so this is the time where I need to ask you guys to share which brokers are you using. Joe, I would guess you're using TradeStation. Maca and Siderman, I would guess you're using TOS. Please confirm that if you don't mind, because the 3 of you are using Real Capital. So this is an opportunity for us to identify the efficiency on how different brokers fill your orders. My experience, to be honest, is that TradeStation is almost always the best when it comes to finding the liquidity and get you filled. While, funnily enough, TOS has probably the best reputation out there on giving you the best fills, but is normally never the case. Okay, here we go. So it's exactly what I was saying. So Joe got filled at 21 with TradeStation, and with TOS, you guys are still waiting to get filled. Okay, so again, the 3 brokers I use the most for options trading are TradeStation, TOS, as well as Interactive Brokers. And to me, the best and I don't mean to do a broker recommendation. It's just experience that I'm sharing with you guys. The best for executions for options and equities have always been TradeStation. Second best, TOS, and the worst has been Interactive Brokers. But again, that's TestyWorks, I think, is about like TOS more or less. Okay. Anyway, this is great that we share these experiences, guys. Okay, because there is a lot of marketing out there, and this is real world stuff. Okay, so Joe got filled, and Maca and Mark didn't. Okay, and they were asking for less. Okay, so that means that TOS is keeping a little bit for themselves. Okay. Cool. Okay. Anyway, thanks for sharing, guys. Yeah, Leland, and I see you are in the same situation. Got it. Anyway, so let's continue. What about the 260 call? Okay. Well, the 260 call is very deep in the money. Okay. And by the way, I love TOS. Don't get me wrong. Just like I love IB, Interactive Brokers. Amazing platforms, amazing things that you can do. But then there is a moment in time where the order is sent in the market, and then those routing technologies, and most importantly, the real interest of the broker as a company on who gets filled and how they get filled and what they keep for themselves, and which exchanges they route the orders to based on how much exchanges pay them, because they get payment for order flow, isn't it? So depending on all of those things, so you get to understand who is who in the real world. Okay, so this is great that we are discussing this. But let's keep going. 260 call. So the 260 call in June 18 has an extrinsic value of 50 cents with a theta of 40, meaning that the Greeks tell you you're gonna make 41 cents a day, and we still got 2 days and a half to go until Friday, meaning that you are supposed to make $1.02. But the reality is that the extrinsic value left is 47 cents. So you cannot make $1. the most you can make is 49 cents, 45 cents, and therefore it means that the Greeks are distorted. So it is time to go ahead and roll the call side, okay? Which, as we roll the call side, we're gonna collect $460 of loss in the account, but we're gonna collect more premium than that, because if you sell the same 260 call using the next expiration date, okay, that option is going to pay you $12, okay? So $12, okay, minus 11 basically is gonna net you a positive credit, which is gonna, again, reduce the risk of the trade and offset the currently accumulated loss that you have on this 260 call, okay? So, and by the way, the fact that this 260 call is giving you a loss also means the 160 call you bought with the expiration of July something is giving you $900 of profit, okay? So again, you are just taking this temporary loss in exchange to lock in profits on the other unit and get more credit in, okay? So not an issue at all, but for the ones of you that are new to the sessions, this is a bit confusing, isn't it? So many moving parts, okay? Some of you are getting used to this, isn't it? And it's all good. So again, if we do the roll, we're gonna collect net by closing and selling. We're gonna collect net 92 cents. And to fully understand what this is gonna do to us, I always like to go to the analysis tab and duplicate this trade. Okay, duplicate the trade. I'm gonna uncheck it, okay? And go ahead, and the 260 call, I'm just gonna move it to be 25 of June, okay? And now what's gonna happen is that instead of 494, okay, we're gonna reduce the cost of the trade by 90, was it 92 cents, right? 90 now, so 90 cents. So it's gonna be 90 cents, okay? And therefore, the new cost for this trade is gonna be 4.04. So I'm just gonna go ahead and here with 4.04. This is the new trade that we have, and this is the one I am simulating now. So notice how there is no check mark on the upper one, the check mark is in the bottom one, and this is the new risk profile, okay? Where now we are very conveniently located below the blue line again, therefore with positive theta, making $16 a day on theta, and now the range has expanded all the way to, sorry, guys, I am looking at the wrong line. Let me rephrase that. So we are here, okay? So we are, yeah, of course, that was silly of me to say. We are, still in the, we just collected new credit, okay? But, we are still in the negative position here, negative 62. We just diminished the risk of the trade, and we widen the range a little bit by doing that, okay? And we'll keep doing it, okay? Next week we'll do it again, and next week we'll do it again, and all the way to July 16. So, to be honest, even though temporarily we can see that we still have risk on the trade up to $404, since 404 is the cost of the trade. So as a few more weeks pass, we will be shaving and shaving and shaving and removing more and more of the risk, okay? Putting on the side that we have red UFOs above and price is supposed to come down and all of those things. Putting on the side as well that if volatility keeps rising as we approach earnings, like let's say 5%, so now next thing you know, we are positive 60 instead of negative 60. So everything is looking good in the trade, okay? And this is the one thing that you need to get used to with those double calendars, which is that there are multiple moving parts, and one thing is what you see in the account now, and a different story is what you see as the net result after you have continuously been rolling and tweaking this trade, embellishing the performance by reducing the risk and adding more to the reward, while you collect more premium and you are exposed to an increase in implied volatility, okay? So anyway, so this is the action to be taken. So we're gonna be rolling this again in order to make sure I get filled quickly. Let me see. I want to shoot for, let's say, 75. Don't do that, okay? Go start with the midpoint to get it filled quickly, so that way I can comment on it. That's it. I got filled at 80. Okay, so I got 80. So then my real risk is 10 cents more. So it's gonna be 414. Here we go. So now I have it adapted. So we can continue tracking this trade. Okay, what else? AMD. So let's look at AMD. Wow, and all these management guys are amazing because this is what will help so much your trades to end up profitable instead of doing nothing and waiting. But it's taking a lot of the time of the sessions, guys. Okay, which is needed. So I guess we'll keep going until the end with management today, and then for tomorrow we'll focus more on executing new trades. So what's happening with AMD? Well, with AMD, if we look at what we have in the account, so currently showing a little bit of negative P&L, negative 38. Okay, but remember, it doesn't mean it's like that. Okay, it doesn't mean it's like that. If we look at AMD, it's showing, actually, it's kind of like that. It's showing minus 30. Okay, why? Because now it's coming back to my mind, and it's refreshing my memory as I see the screen. So what happened in this trade is that we only did one roll. We rolled straight all the way into June 18 because there was no premium enough to do any additional rolls. Similar to what we saw with PayPal, with the put side of PayPal. And therefore we decided to leave it alone there, and we are just waiting, isn't it? So let me take a look at 70 put and 85 call. So 70 put and 85 call. So 70, oh yeah. So we get nothing at all, still nothing. So implied volatility has not been rising yet. Yeah, even if I go all the way to 2nd of July, there is no implied volatility yet. Yeah, still 29 and 30. So still we have more or less the same implied volatility in July 16 versus prior expiration dates. So yeah, so not much to do here, to be honest, just to wait. And wait until volatility starts coming in, so we'll be able to do better rolls. In the meantime, it's looking like that for AMD, we're going to do the same thing. I'll confirm that tomorrow, but we're going to do the same thing that I said we would do for the puts on PayPal, which is to wait until Friday, let them expire, pay no commissions for it, and on Monday, sell new units to keep playing the game. And keep going until July 16 expiration, okay? Last one, Lily. Okay. Okay, loading. I'll take a sip of water if you don't mind. Nice. So where are we at? Where are we at with Lily? Strong reaction to the level that we identified there at 233. Nice timing, by selling the 240 call. That locked in that profit, removed the risk of the trade. Okay, and now where are we at? Well, now we are in a market that it's certainly pausing after such an explosive move. So this, in the world of technical analysis, would be called an impulse followed by a correction. We should get in corrected mode just a bit more because this is candle number 10 out of 9. So we are surpassing what statistics would suggest is reasonable for that stock to continue going higher. So, we should see that stock, come down a bit more, probably maybe come down to this UFO, okay? And from there, start going back up. And again, ideally, in a perfect world, on expiration, we will end up above 240 because if you remember the risk profile of the stock, this cannot be Lily. Yeah, okay, now I'm like this cannot be Lily. So if you remember the risk profile, the worst case is to make 223, but the best case was to make 1,200 over, right? But that only happens above 240. So ideally, you would go back to above 240. Okay, and if that's the case, great. Now, what is the other thing that may happen is that the stock comes down, and we are not getting close to 240. So again, then worst case, we'll make 223, which is okay. We were okay with that last week. Okay, but something that we could do to try to make this a bit better too is to monitor the price of the 240 call. Okay, which we sold at 239, and it's currently trading at 129. Okay, it's currently trading at 129. So again, if you close this call now, which I'm not saying we should do it because it would be a completely different plan, but I just want to do some math with you guys. If you close this call now, you sold it at 239, you buy it back at 129, so you would make $109.50. In other words, we did very well by doing that the other week, because now as the stock is going down, we are collecting some money. So let's say the stock was to keep falling and falling and falling and falling. So there is a moment in time where this call, okay, there is a moment in time where this call may be worth very little, and it may be worth it to close it and sell a call at a lower strike. Take a look at what I mean by that. And to be honest, I cannot show you. Why I cannot show you? Because there is no other strike, if I'm not mistaken. We got 240 and 230, exactly. I remember well. So strike price increments are $10 at a time. So to show you, I need a strike in between, and we don't have it. Okay, so I was going to say, so if stock drops and drops and drops and drops, you may be able to buy back the 240 call for very cheap and sell a new 235 call for more premium. And then, basically now, worst case, instead of making 233, now worst case is to make 350 and improve your worst case situation as the stock is moving against you. So I was going to suggest to do something like that, but with $10 strike price increments, we cannot talk about it yet. Notice I said yet. Why? Because as time passes and we are approaching July 16, it is very likely that new strikes will be released and listed by the exchanges. So later in time, maybe it's going to take another month, but we may get to see the 235 that does not exist at the moment. Okay, so we'll have to monitor and see. At this moment, to be honest, there is nothing to be done. Remember, it was a trade where basically we said hands-free. Worst case, we make 220 something. Best case, we make 1,200 over, and that depends on ending up above 240 or below 240. That's it, right? So nothing to be done on this trade. Just observe the 240 call as it reacts to price movement going up and down, because we may end up acting on it in a future session, but not today. Okay, wow, 1 full hour of reviewing stuff, and we are done with the reviews, to be honest, and we got 4 minutes to go, so I will not be planning on a new trade today. We'll do that tomorrow. I got concerned, Mark, earlier when I was looking at the S&P and you had UFOs. I don't. So again, I would like to go ahead and recheck that with you. I am using the 55-minute time frame. Okay, I am Control R, forcing a full reload of the chart, which is happening now. So please hit Control R yourself. Thank you so much, Furman. It's nice of you. Okay, so it's taking a long time to load. So it's loading. So basically I'm reloading all the market data. And while it's loading, again, I want to show you that I'm using natural hours. Okay, the amount of bars doesn't matter. 1,597, it doesn't matter. Natural hours does matter. I am also using the exchange time zone. This matters as well because it has to do with the natural hours. Okay, and my calibration is 0.618. Okay, so if you have all of these like that, you should be able to see the same UFOs I have. Okay, so I just wanted to redisplay everything for you, Mark, so you can re-review yourself, because sometimes and this may be what's happening. Your stuff, Mark. You have experience with TradeStation, and therefore sometimes we get a bit overconfident. Happens to me. It happens to everyone really, and there is that some tick somewhere that you forgot. Okay, so re-review everything, and if it's still the same, so then I suggest that you open a new chart, a brand new chart in a brand new desktop, and run it again and see what happens. Because sometimes with TradeStation, what happens is that either the workspace or the desktop or the chart windows get corrupted. So then you need to create a new desktop, with a new workspace inside. Add a new chart. Okay, don't copy and paste the chart. Add a new chart from here, okay, from the app tool, and then do whatever you want to do there. And you know, because everything has been created new, then nothing is corrupted. Yeah, so if you still have the UFO and you have exactly the same mark, I would suggest that you do that because there is no explanation for it, okay? The other explanation is that you're using data from one exchange only, but I believe that in the past I already asked you that question and you told me it was not your case. So it should be some sort of a corruption on the workspace. So restart everything fresh and check again. Cool. Yes, Joanne. Yes, Joanne. Yes, everyone. Looking at every chat box just to make sure we are all in sync. Perfect, my friends. You are the best. Appreciate very much you joining me. I love it. I'm always having a lot of fun. How is it going, guys? Before we go, share with me, guys. And by the way, I accept positive critique, so you don't need to be nice to me. How is it going? Are you learning? Are you making a few bucks in the learning process? Are you having those aha moments little by little? Are you becoming more comfortable little by little with you know, all those complex option strategies with multiple moving parts and various expiration dates and all of these things? So let me know how is it going, guys, because again, that's the only way for me to know how much I'm helping you guys. So feel free to share. Thank you for that, Ahmed. Thank you for that, Joanne. Okay, so I think that those were your comments. Feel free to shoot an email as well, okay? If you prefer, you know, to keep it more, let's call it confidential, and you want to share, definitely, you know, more than happy to receive your message, okay? And I'll get back to you. Like the whys of rolling, thank you for that, Joanne. You know, I love the whys too, because, you know, the whys, apart from, you know, basically understanding what you're doing, it goes hand in hand with the confidence when you trade. If you don't understand the why and you just do something because someone told you, but you don't understand the why, then it's difficult to be confident. And maybe trading a small size is okay, but when you trade a big size, you just cannot perform because of lack of confidence. So the why to me is key. Sometimes I may end up, you know, going too long into certain explanations, precisely because to me the why is very important. So I appreciate you guys bearing with me when I go on and on. Ahmed, you made options easy to understand. Thanks for that. The guy from Kansas, say hello. I miss the guys from Kansas, Leland. So please send a hug to all the team over there, okay? Maka, when are we going to see new tools? Very soon. Very, very soon. Very, very, very soon. I would say in less than a month. I cannot wait, Maka. I never think too long. You guys are very kind. Thank you so much. Guys, see you tomorrow, same place, same time. And let's continue with this, okay, guys? Let's keep up the good work. See you then. Keep up the good work. Really understanding options better. Thank you for that, Sadio man. Very nice. See you tomorrow, guys. Take care, everybody.